Hey, what's going on YouTube? This is Tom here with another episode of Market Cap Investing. Week 11, here's where we're at. We've invested $49.46. We've made $3.73. I know it doesn't sound like a lot, but that's a return of 7.5%, which is an equivalent APR of 35.5%. This is way outperforming our expectations, but we're really happy to be doing so. Again, purpose is around power of long-term compounding growth using fractional share investing. I want to talk about Rule 1, slow and steady wins the race, because today we have to decide which of two companies we want to buy in a market that we think is growing. So which one's going to win, which one's got better products and services, and which one's going to be the winner over time. We're looking at Under Armour and Nike and comparing the two. This came from one of the viewers' suggestions, so we're taking a close look. Under Armour has a market cap of $7 billion, almost $8 billion. Again, that's the cost it would take to buy the entire company. Nike has a market cap of $178 billion, so more than 20 times bigger. Under Armour has revenue sales of $4.5 billion per year, where Nike has $40 billion per year, and Under Armour makes only $110 million per year, where Nike makes $5.6 billion per year. So Nike is far outperforming Under Armour, so they have been winning in the market. However, this is one of these areas where Under Armour and Nike seem like equivalents to most of us, right? When we go out and go shopping, Under Armour's a really strong, high-quality brand. Nike's a really strong, high-quality brand. So I'm conflicted. I'm going to go ahead and buy Under Armour today because I think it's got the bigger upside in that it could grow and cut into some of Nike's share. But I'm also thinking about coming back next week and buying Nike. If you want to choose Nike instead of Under Armour, I'd be fine with that as well. I'd love to hear your comments and thoughts on whether I made the wrong choice or the right choice. But in the meantime, let me switch over here and take a look at Under Armour's performance. Their general revenue, sorry, I don't know why it always does this. General revenue over the last several years has been relatively flat, down a little last year because of the pandemic, I'm sure. And their earnings have been steadily growing until recently. And so you can see that a little bit over here to the right in the chart, and that annually their revenue's been going up and earnings have been going up slightly. And recently they've been coming back. So we're going to give Under Armour our nod this week. We're going to log in over here in our Fidelity account, $5 a week, make our purchase of Under Armour, and add it to our portfolio. Again, this is a tricky situation because we don't really know who actually is going to win in the long run. Likely both will be very successful in the long run. It seems like Under Armour has more upside, so that's where we're starting. But it's very possible next week I come back and say, let's buy Nike too. It's certainly a good company that has done very well and has been winning on the bottom line for sure. So here we are, $5 in Under Armour, preview order, place order. We will come back and look at how our summary of our positions, and there we have it right there towards the bottom, top of the screen right now. Under Armour, 0.318 shares at $15.72 a share. All right, well, I appreciate everybody watching. If you want to follow the journey, please like and subscribe, and I'll see you again next week.